What's up, trader homies? So this Apple stock has been on an absolute tear since hitting coronavirus lows of about $218 per share. It has since rallied since late March and is today trading over 100% higher at $440 per share. It has been on a crazy run of late, and the price has got a little bit up there. And apparently, Apple Investor Relations wants this thing to be retail traded and available for your smaller retail traders. So they are going to be issuing a 4-to-1 stock split. In today's market analysis, we're going to be talking about what this means. What is a stock split? What does it mean for swing traders? What does it mean for active day traders? And what does it mean for your longer term investors? So stay tuned for today's Touchdown Trades market analysis, where we're going to be discussing the Apple stock split. What's up, trader homies? This is Kevin from Touchdown Trades. This is a channel where we talk about the hottest stocks in the market. We have live day trading videos, live swing trading videos, and trading tutorials. So if you're into that type of thing, consider subscribing. All right, guys. So this Apple stock, AAPL, has been very, very strong. If you're involved in the market, you know this thing has been really strong since hitting a bottom here in late March. It has since rallied all the way up from $220 a share, over 100% move, and is currently trading right under all-time highs at around $440. So Apple just announced the other day that they're going to be issuing a 4-to-1 stock split. So what that means is, let's say that Apple's trading at $400, because I'm not very good at math and I want to make this as simple as possible. So it's trading at $400 today, and you own one share. So after the split, your position size will be the exact same in dollar amount, except you'll own 4 shares at $100. So the market cap of Apple will be exactly the same, and your position dollar size will be exactly the same. You'll just own 4 times as many shares. So it's not going to affect any P&Ls or anything like that. So this is the 5th stock split in Apple's history. The first one they did was in 1987. And if you had just bought one share in 1987, it would be worth 224 shares after this upcoming stock split, which I found very cool. And you know, some old grandpa dudes were loading up on this Apple stock in the 80s, and they are just filthy rich off of just this Apple stock alone. Because imagine you bought 1,000 shares before the first stock split. You multiply that times 224. So we'll say Apple's going to be worth $100 after the split. So you have 224,000 shares times 100. What is that? 2.24 million. And that was just if you bought 1,000 shares before the first split. So it's going to be the 5th stock split. So it's nothing new. It's nothing that they're pulling out of nowhere. This is something that they've done in the past, and they like to cater to the retail traders. They want Apple to be available for your average Joe to buy. Unlike Amazon and unlike some other, like Google, you can't buy, retail traders aren't loading up their portfolio on Amazon because it's so expensive. What is it trading at today? I think it's like 30, what is Amazon? Amazon's trading at $3,100 per share. So your average Robinhood traders aren't loading up on Amazon stock. And the Apple Investor Relations want Robinhood traders to be buying Apple. Why is that? Before the coronavirus hit, your average retail traders had no impact on stock prices whatsoever. It was your hedge funds, your big funds were moving the stocks. Your average retail traders could not move a stock even if they tried, right? Except for maybe penny stocks and low float stocks. But since the coronavirus, that has all changed, and we've had an influx of small retail traders coming into the industry, which has kind of flipped things around. And now retail traders have a say. They have a say in where a stock goes. If a bunch of Robin Hooders are jumping on Apple, for example, it could move the price. It could legitimately move the price. And that is crazy to say because it's never been like that. But we can see that retail traders are coming into the space like never before. TD Ameritrade said it added a record 600,000 new funded accounts in the second quarter alone. Interactive Brokers also smashed expectations, and I also read an article that Robinhood and Webull have added tons of accounts as well. So retail traders are coming in heavy. They got their stimulus checks, they're laid off, they got time to kill, and they are sitting at home and wanting to trade. And that can really, really affect a stock's price. Let's just look at a few examples. Nikola. This was retail traders blasting funds and the so-called sharper traders out of their early short positions. And once the retail traders sold at the top, it rolled over. Tesla. You think this was funds buying way up here? This was funds? No, this was sharper traders getting blown out of their short position and retail traders just buying it up. Workhorse. The whole electric vehicle sector ran up on retail volume. This was not fund volume. This was not hedge fund volume. It was retail volume. So what I'm getting at is Apple is smart in wanting to make this available to your average traders because we as retail traders, small retail traders, for the first time have a say in where these large cap stocks go in share price. All right, guys. So before we talk about what this means for your average trader, your average active trader, or your average investor, do me a big favor and smash like. Just give it a quick snake eye jab in the eye. The smash like jab in the eye. That's how we do it here. But anyways, let's move on to talk about what this means for your active trader. So what does it mean? First, let's talk about what it means for investors. And basically, it means really nothing over the long term for your average investor. The market cap is going to be the exact same. However, I do think Apple may be a little more volatile, and let me explain. All right, so the market cap currently is almost $1 trillion. I think it's actually $1.7 trillion. So we have a market cap of $1.7 trillion, and that is going to stay the exact same after the split. However, it is going to be more accessible to retail traders. So you're going to have more volume traded on a comparison versus the volume traded today. So this average volume, if it went up by 4 after the split, that would be the same average volume compared to before the split. But I think it's going to go up by 5, 6, 7, 8 because it's going to be more accessible to your average retail trader. So I think we're going to have more volume coming into the stock, which could create a little more volatility intraday, but over a long time frame, it really isn't going to matter. However, for day traders, swing traders, and your active traders, this is huge because, like I just said, it's going to be more volatile intraday. You're going to be able to sell covered calls. What that is you buy a share or you buy 100 shares of a stock and then you sell a call higher than your price, right? So let's say, for example, it's trading at $100. You buy 100 shares at $100. You then sell a call at $110. And if it's trading under that price at expiration, you keep the credit. If it's trading above that price at expiration, your 100 shares just get taken away and you still keep the credit. And traders like to do that to hedge on their risk. And currently, just this thing is too expensive for retail traders to be doing covered calls, swing trading it, and just buying for short-term holds. Maybe traders are utilizing the options market. I like to trade Apple options currently because of the liquidity, but with the stock split, it's just going to be more accessible to your Robinhooders, to your Webull traders, and to your average active intraday trader to trade this on news and just your everyday intraday trading. So I think it's going to bring some liquidity, definitely going to bring more liquidity. It's going to bring more volume, and it's going to bring more volatility into Apple stock. So should you buy this thing or sell this thing before the split? If you're a long-term holder, no. If you're a swing trader, no, because there's no really way to tell how this split is going to affect the short-term stock price. We just don't know what it's going to do. So if you were to take a position just based on the stock split, I would consider that gambling. So I hope you guys got something out of this video. If you did, go ahead and hit the like button for me. If you're not yet a subscriber, what are you doing? The realest trading channel on YouTube. Not the biggest, but the realest. We keep it real at Touchdown Trades. We go over the hottest stocks in the market every single day. Trading tutorials, trading platform tutorials. We are just the shiz, as the kids like to say. We're the shiz. So go ahead and subscribe. I'll catch you guys in the next video. I appreciate the view. Peace.
Drop.